S&P futures pull back from their highs, Nasdaq pulls back from its high, and one key mistake traders are making. Why small caps are bearing the brunt of the recent pullback. The civil war in Russia and what it means for the equity markets. What sectors are hot, which sectors are leading, what the recent moves in smart money, dumb money are telling us. SPY cumulative AD line and what it's telling us about the next 12 months. The recent moves in the leaders and how to play them. Why the recent move in Tesla is hated. How to correctly play this market environment and what semiconductors are telling us. We have a ton to go over. Let's get to it. Hey everybody, welcome back. So we have a lot to go over. We're just going to jump right in here. So if we take a look at the S&P on the weekly, a lot of people getting very upset with what they see going on out there. I really don't see a sense in worrying about a whole heck of a lot here. What we've been able to do is just break out and then we're going sideways. Worst case scenario, we pull back from here. Now, even if we pull back from here, this assumption that we're just going to fall out of bed is somewhat troubling. I'm not really sure what people are looking at technically to determine that this rally is over, but I certainly don't see it that way. So now, of course, there's signs of uncertainty and we're going to address that. And there are things that we should be concerned about, but I have a really hard time looking at this and then technically just assuming that we're going to keep hitting higher highs like we're doing, and then for some miraculous reason, it's just going to reverse. Being that person that is predictive is probably the worst thing that you could do. Here, they were calling for the end of the world. We're never going to come back from that. This is it. We're really going to break. Here comes the financial crisis. Financial conditions are worsening. And this was just peak inflation. And this was, again, I've gone over this trade numerous times, but this was the easiest trade if you were just watching the macro space. This is where we knew that we had a problem with CPI and inflation because of what Powell said about what he was going to do. This is when inflation peaked. Inflation is predicted to be down substantially next reading before the July 26th, and we'll get into some of that. But the purpose that I'm getting at here is, if you didn't predict this, why are you trying to predict this? Why don't you just trade with what is actually happening? I mean, it's one of the statements we always say in the trading community, just trade what's in front of you, right? Just actually execute on what's happening. Don't predict what's going to happen, just analyze. So if I'm to look at this, then what would concern me if I was a short-term investor would be, if I take out that low, that would be at a down bar, right? And we haven't really had one of those. We really haven't broken a lower low in a period of time. You kind of goofed around with it here and then reversed. And usually you're getting Wick City in here. But it is possible that you break down through that 43.76, it looks like is where we're at there. And then what you would be looking for is, I think it's actually 43.80. So if you look at that, and then, okay, so that takes us to 43.21, right? That would be your next stop there. I really don't view that as the end of the world. One of the things we went over in the recent video, and we're just going to go this from the high. Last Saturday, we went through this pretty viciously and pretty intensely. You know, that's a 3% drop from that peak, right? That is not the end of the world, okay? I went over this and stated that, you know, it's very realistic that when we're up this high that we have a pullback. The average pullback is roughly 4%. Now, I don't know that this is going to be any steeper than that. I really don't have a way of knowing that, right? But if we look at how this is playing out, it's increasingly clear to me that things are getting stronger and they are getting better. They are not getting weaker. For example, if you go over here and just do something as simplistic as throw in a MACD and you just look at the moving averages and how they're acting, we broke over the zero line. We were never over the zero line since we cracked back here. And now all we're doing is pushing and going higher. But we're nowhere near even peaked on this or going sideways, which could happen. And this is a weekly reading. Okay, I want to be real clear about that. That is not a daily reading, an hourly reading. This is very hard to just all of a sudden say, oh, it's gonna roll over, right? So I don't really see the world that way. And I can click off of this for a moment. We can pull this up, but I don't really see it that way. So you might look at this and go, well, it's not something that is really that interesting to me, or I really don't look at that. Well, if you look at rate of change, which is another way to look at things, and you see how that's going, and that's just very simply exactly what it is, rate of change. Well, what happened here? Okay, well, right here in October, this area right here, we got back over the zero line. Well, what happened when we got back over the zero line? Okay, we've been ripping ever since. Are we under that zero line? No. Okay, the rate of change is positive. It's not even remotely close to not being positive, right? So when we look at things like this and you look at the MACD, RSI, and people will say, oh, well, they're technical indicators, they don't work. They work. They might not know how to use them, right? There's a differentiation there. So I'm a big believer in technical indicators if you know how to use them right. Just no different than how a carpenter likes a certain kind of hammer, okay? You just have to know where and when to use it. So if you're looking at this, I have a real hard time looking and saying that this thing's broken. But if you get into the daily and we look at what's happening here, and what we'll do here, let's do this setup and then we'll throw it in here so we can really drill into this. If we look at the setup for a moment on just the weekly, I don't see it. Here's your 9 on the weekly, okay? I don't see it. If I drill into this on the daily, okay, so we got over, which we knew we were very high on, and we've undercut. Now, that undercut on RSI, that's not great, right? By any stretch of the imagination. It's definitely not something that you're going to look at and feel great about, right? So you're going to want to see some kind of change there. They keep changing this on me. Give me 1 second. It bothers me. Fix that. Perfect. So what I'm looking for here is I'm looking for maybe a test down here. Maybe we get a test to that 50 level. But the idea that this area in August is exactly like here is just delusion. Okay, earnings are better, inflation is down. There's a lot changing, and to just simply assume that all this basing is just going to go away, very different than what happened here. So I would just tell you, if you're looking at comparisons, I would be really careful. Now, if we look at the Nasdaq on a daily, and let's throw this one chart in that I think will be way more helpful. Get that in there. Is that going to be it? There it is. So this chart is very simple. This is a 12, this is a 22, and this is a 55, and this is the daily. And I'm just going to outline this. So I like using a 12. People can use a 10, an 8, a 9. This is an SMA. I've found it extremely helpful to use a 12 in these types of times when you're coming out of a base in a stage 1. So that's what I tend to use. If you look here, since you came out, you've rarely closed below it. A couple times, and maybe that shook you out, and then you pulled back, and then you rallied. I mean, it really gave you very nice spots to get involved, right? And we're just sitting up here. Now, I don't know if that's going to break or not. And if that does break, it's a pretty clean shot on where these levels are, right? And we could pull back. We could. We had a nice run, and we could give some back. And this 14.68 makes a lot of sense because that would be a pullback right to our level right in here, and we could see how that could play out, right? So I like using these moving averages during these periods of time. I find it extremely helpful in just understanding where the players are. If you're going flat and you're flatlining like you are in here, moving averages are an absolute waste of your time, and you're going to get chewed up. When you're coming out of a base, they make all the sense in the world. You need a trending market to use moving averages. But even here, if we take a look at the RSI, it's not falling apart. You look at this on the weekly, and if we just click off of these for a moment, we're going to come back to them because I want to point something out that's pretty substantive. But if you look at this on the weekly, you hardly moved off of this. We hardly moved, right? So you start looking at it from that perspective and going, okay, well, what does that mean? Well, that probably means that chances of us going lower are pretty slim, in my opinion. If this needs to get a lot weaker and see some real signs of it, and you're not seeing that, like here you had this divergence, and we can all see this divergence. I mean, it's glaring, right? And these do mark tops, especially on weekly charts. You know, they do mark areas of concern, right? As a matter of fact, and if you go through this, this is the real first one that you had. And then, of course, I posted this on Twitter and stated, well, here's the first one that you have here, right? As far as a positive divergence, and that was right there. And that was very clearly what? The bottom of the market. So you look for these things and you look for signals. Now, if I'm looking at this, I don't see anything that's wrong. That doesn't mean that certain names can't collapse. Of course they can, and we're going to get into that. We have a lot to get into. But I think we have to look at this and say, without any moving averages, without anything going on, what is someone saying that's going to make this collapse? It's going to come in because stocks went down, because these stocks dropped. For example, and this is where I'm going with this, This is AVGO, right? And this name everybody loves. Everybody's upset because it didn't go up another $40, $50 in a day. Like the amount of reality that people need to get a hold of is substantive after 2020. I keep saying this statement over and over again. Nobody is going to inject $1.7 trillion into this market ever again, right? You're never going to see that again. The next leg of this, if you look at what's working, it's all being generated by alpha, real returns. So you're going to have real money in the market, not the Fed money propping us up artificially. Real money is worried about making real money, not propping up the economy, right? They have a completely different job. So what that means is they want to do what? They want to make money. They see weakness in the market, they're going to lock it in, and you no longer have that safety net. Hence, you're going to have more volatility, and people need to start understanding that. It's very difficult to look at NVIDIA and say, oh, thank God I got out of NVIDIA. And the one thing I've been trying to get people to say, if you bought NVIDIA from October to date, when was the wrong time to sell it, right? Anytime. When was the wrong time to buy it? No time. Okay, so instead of looking at this, unless you're a scalper and you're looking at just a 1 minute chart, I would strongly suggest that you start looking at this stuff longer term and going, okay, well, how am I going to act if there's a 350 test? Right? Am I going to get out of the way? Am I going to participate? In other words, start having these set up in your head on how you're going to act. If this got down to 350, I'd be salivating. I'd be very excited if this got back down to 350. I don't think I have a chance personally, unless something happens, and we're going to talk about that in a moment. The purpose of me going through this is to understand the moving parts that are going on out there, okay? When you start looking at NVIDIA and you start saying, how are we going to fall apart or this market's going to drop, start understanding where these sources are coming from. Start understanding, are they investors? Are they traders? Are they people that are just trying to get you to like or click on something? I can't stress this enough, especially during this time. You're witnessing something that we have not seen, I think, since .com, and I'm not alone in thinking that. If you go out and you look at Stanley Druckenmiller and what he's saying, he thinks that this could be greater than .com. And I agree with him. And that's not a day, that's years. So people need to just kind of change their time frame and just watch the earnings. If the earnings come out and they're bad, well, maybe it needs more time. Maybe it's not there. If you look at the SOXX on the weekly, you can see the bottom here, how we broke out, how we pushed flag after flag after flag. Am I excited that it broke here? No, I'm not. And this is not a pattern that I really like. I really don't like when we're breaking out, hitting lows, and then we close at the low. It usually means we're going to wind up going, what? Lower. And if that's the case, then that's the case. So for me, looking at this, we got out of this SOXL trade and I posted that. And make sure you click the link in description and also the link in comments, because I'll have 20 charts that explain in detail what happened this week. It's just a nice recap. It goes over some of what we go over here, but there's also some things in there that might be a little bit different. So if you take a look right here, and you see that SOXL level, well, we got involved down here, 14, stocks trades up, we blow it out, and now we're sitting back watching and waiting. That does not mean that I think the semiconductor move is over. It just means that I'm orchestrating money management. That's all it means. I made money, I'm waiting for another setup. When I get it, I'll get back in. Now that setup could take a week, could take a month. We don't know. And we can't assume that the next group of rally that takes place is going to be semiconductors. A matter of fact, it'd be healthier if it's not. Now, last week we went over a couple things. One of the things I went over, and I stated, if you were looking to short and you wanted to short semis, which I really did not want to do, I'm more interested in building long-term positions in them, then you need to take a look at what's going on with AMD. Well, that worked out perfectly, and I want to be real clear about this. With this lack of $1.7 trillion in the market, people are going to buy the leaders. That's where they're going to go. They want to own the leaders. They do not want to own the second or third tier right now. Okay. And AMD is second tier when it comes to AI chips, period. That's really not up for debate, right? So if we look at this, we can see that we got to a level, we rejected that level, and now we're rolling here and we're through. Well, that's not ideal. Okay. That is not ideal if you're in this, but I would suggest that you do a couple things. Number one, and we're going to go back to our chart, is I would be overlaying these moving averages. Now, whether or not you want to, that's up to you. But for me, when these things start crossing like they did down here, you need to start paying attention, or I certainly need to start paying attention. This became abundantly clear, right, that semis were going to rip. This is telling me very clearly that I have a top putting in. I'm putting a top in on AMD right now, okay? So that's not really the name that I want to watch. I can see these two colliding. I can see us possibly getting back up here 117. Now, at the same time, that does not mean that there's not a couple dollar trade there. So you see that doji sitting right there and how you gap filled, right? And again, I don't know that we really truly don't break through this if something monumental happens. And I also don't know if we break through here. What you're doing is you're just setting up money management around the particular trade. So if you look at AMD, right, and you look at what's going on there, and I drilled into this week. Let me just close these out. And I drilled into this week just to kind of get into this. Get rid of regular. Just put regular in here. Just to point some things out. And this is not my favorite idea, right? But like, I'm not really crazy about AMD up here. I think that their conference was really done very poorly, quite frankly, compared to what's really going on out there. But you can see your trading range. I mean, that's on an hourly chart. Here's my trading range. My RSI is completely washed out. It's not a positive divergence, but I'm pretty washed out here. Now, does that mean that I'm going to absolutely go up? No, it does not mean that. But what it does mean is it does mean that it's definitely something that I want to pay attention to, because what if I come back down, test, and then go, right? That might be something to watch. So I want to pay attention to this level on AMD. I have a gap here. It is possible that we hold into that gap and go from there. Now, in regards to NVIDIA, which we should spend a little time talking about, that looks a lot different, doesn't it? Okay, when you compare that to the AMD chart. Now, people will say, oh, well, that's because it's going to go the same exact way. I don't know that. I don't know that it's going to go the same exact way and that it's next. I know that that's the assumption that it is. I know that I have a trend line right here that we're respecting on it, but I don't know that, right? What I do know is that it's very possible that we hold in here. So for now, I'm going to watch this. I'm going to wait to see if it sets up. And if it starts breaking down, I can give you a couple levels to watch. So I'd be watching that 419.50. And I'd be drilling into this on an hourly chart right now and just seeing where the levels were. You can see how you broke out right around here. So if this goes, then you're probably looking at this 409, maybe that little wick, maybe this little area right here. That might be something 413 3/4. That's a possibility. And then if that goes, then we're just going to kind of walk our way down here, right? And I'm not so sure that happens. But let's just talk about this. We were just there a week or two ago. So coming back down, it's not the end of the world. But if you're a short-term trader, you just might want to remember those levels. Now, you're seeing other names step up to the table, and you're starting to see names like Amazon come out with their process and what they're saying they're going to do. I do want to point this out because I thought that this was pretty substantive. The amount of volume that they had was pretty staggering to me. And let me just move this over again. It keeps changing this for some reason. It's super annoying. Now, I'm going to leave in volume for a minute, and let's get rid of the earnings. I don't have to see that. Now, this was just news from the newsletter to kick that out. If you are on the wait list for the Alpha Chasers community, be on the lookout for a letter. There will be some invitations going out very shortly. If it's something that interests you, I would suggest you get on the wait list, because then there's going to be a period of time where the community will just close and enrollment will be closed. So here we are, AMD. Let me just put this up here for a minute. So here we are, Amazon, and we can see our level right here, and we can see how we're pushing. But look at that break right here. And what's in front of you is relative volume. And the way my relative volume is set up is it's a host of clouds that have different levels associated with them. And then on top of that, I have a moving average line right here. In order for these to change color, I need to be above all of these, okay? So now I'm getting a bunch of greens up here. And that's something that I pay attention to. And you can see how we have this flag, right? You just literally just a beautiful base. Some would argue it's not a flag. I don't really care. Either way, I have this beautiful base. I'm breaking out. Now I have this doji. I mean, they made life very easy for you here, right? And what you're seeing is you're seeing rotation. So whether or not you want to see rotation, right, or you just think that semis are just going to go up every day, we're going to rotate. And what we're doing is we're rotating into the next group of names. So for example, one of the key things that I tried to point out is that XLY is at 40-year lows in regards to hedge funds. meaning that their exposure to retail names is at 40-year lows. Well, there's two names that make up about 40% of this, right? You have Amazon, and you have Tesla that make up a very large portion of that. And we're going to get to Tesla in a moment here. But the point of me getting at this is this. We're starting to see rotation. And if we continue to see that rotation, well, that's definitely something that we're going to want to pay attention to. So if we drill into XLY, and I'm going to give you a really quick way that anybody can do this and measure what's going on. Take XLY, and then what you're going to do is look at its relative performance versus the Nasdaq. Come in here and click it. There we go. And we're going to turn this into a line. And let's get rid of the moving average for a moment. So, and let's go to a weekly so you can just see how insane this is. So if you go back through time, and you can only go back 20 years, it'll show you where your median line is, which is like 0.67, right? That's 50% line. So then we're going to come over and just drop this down and look at where we're at. And that little turn that we're starting to see, we're not anywhere near anything that is relatively normal in owning these kinds of names, these retail names in regards to the Nasdaq. So it is very possible that this outperformance that we're seeing this week continues. And let me explain what I mean by that. If I go from a weekly and I click this on a 5-minute, I'm going to open this up. This is going to look extremely different, right? So if we go back and take a look from June on, and you look at what's been happening in June, well, retail is outperforming the Nasdaq. And that is something different that hasn't been happening. Now, what we've done in the communities, we've identified the names that we think are going to perform the best, and some of them are doing exceptionally well. You have ULTA that has bottomed. Let's throw that back into the candlesticks. And what's happening here is this is pretty clear to us that you're forming a bottom, or that you have formed a bottom down in here, and now you're into the gap. I don't know that this is over. I don't know that I'd go crazy here in the middle, right? Because now you're in the middle and we kind of have a 10-point cushion already. I don't know that I go crazy in the middle, but I do think that this 475 level is doable. I just don't know that I have the same risk profile here, right? Because now there's 20 points. Let's call it 20 points up, right? And then 10 points, 13 down. I'm not really at 2-to-1. I probably want to be a little bit bigger than that on something like that. So I'm not really crazy about that idea here. I like it as somebody that owns it, but I'm not crazy about that. But these names are moving. Now I put this in the newsletter. This was where we bought it. It came out, hit an all-time high, testing that support level, right? Resistance flips to what? Support. This ELF makes a lot of sense to me still. This is hitting all-time highs. We're hitting all-time highs. And I don't know, let me clean all this off and start over. So I don't know how you're going to look at this and say, oh, well, I got to get out of that because you have a wick. I mean, you're going to have to let things play out a little bit unless you're a day trader, right? And I really think that's an important concept for people to get. Let me just pop this in with the moving averages on the daily so you can see it, and I'll throw it in with the weekly. I mean, you want to play with that? I mean, it's perfect. You literally have never broken the 12-week moving average in a year. I mean, if you can't say that that's a level that you should be paying attention to, I don't know how you're going to draw a level. And you can see how it was absolute nonsense when it was just going sideways, right? Versus what happens when you start a trend, right? All of a sudden you have something of substance. So if you take a look at ELF, their names I'd be looking at, Race, okay, all-time highs. We are very quietly up $25 now on this name. And I'm just going to point this out again. Okay, I'm using a 12, a 22, and a 55. You should use whatever you're comfortable with. And if you see here how we're pushing, that's where I think our target is. Okay, and we're up in this. I think this has massive potential. They have a 2-year backlog. Nobody's paying attention to this stuff, guys. Like no one's saying, oh, what's going on with Ferrari? Like no one's paying attention to that, right? Everybody's worried about the AI, and I'm not saying that I'm not. The majority of my trading's in it, but you start looking at diversification, and it's not the worst idea in the world to have something like this that is constantly hitting all-time highs very quietly that nobody is paying attention to, right? Makes your life a little easier, and it's definitely less stressful. So I think that I would be looking at those names. This is the space that I think is what I would refer to as hot. Now, the space that I think is going to become the leader, I think, is this XLC. And we can see a couple things here, and I want to point them out. This 12, we've been breaking below the 12 and the 22 right? We have broken below those. And what's it done? It's provided a buying opportunity, okay? So where we're really seeing major support on this is this 55. So we can break these, which would be painful to what I'm going to suggest that you look at. But go and look at Meta, okay? And look at these lines. I mean, this is glaring stuff, guys. Absolutely glaring stuff. And I've not closed below the 12. I think I had one day here I closed below the 12 after earnings here. One, right? So you're not really seeing a lot of that. You're certainly not seeing a lot of closes below the 22. Of course, they do the fake out before earnings. But here you are very quietly back to this high and nobody's talking about it. Now go look at the last 10 minutes of the market on Friday. And what I'll do is I'll click off these. Let's get rid of these for a moment. There you go. Everybody knows this is Meta. It's right there. I'll put those back on when we go to the daily. So here we are on Meta and we're breaking out, right? Coming across and we're breaking out. Well, that's interesting. That's the last 5 minutes. I wonder what happened, right? So then you take that and you drill into it. Maybe we'll just do it this way. Yeah, pull this up. Let me switch to this chart because this will be a better way to look at that. And then we'll flip this to a 5 and then you'll be able to see it this way. Look at that volume spike at the end of the day right there. I mean, there's nothing even remotely like it. There's nothing like it, right? I mean, that is just absolutely glaring to, and it should be glaring to anybody what's going on there. So I'm going back and what I'm doing is I'm looking for the next one, right? Show me a place where this happened before. And then what you could do is go, well, there's a huge dump here. Okay, well, then stock went higher. Okay, there was a huge buy here. And then what happened? Stock ripped, okay? Probably earnings, right? Then you backfill. And then what's it do? It rips. So I'm seeing that. Now, there's other names that looked like this the other day. Okay, what happened with Netflix, right? It's something very similar. Look at the end of the day, okay? That's really interesting to me. And that's very different than what we saw happen in names like NVIDIA at the end of the day, where everybody's like, oh, I got to get out of NVIDIA, right? So that's what I'm saying. I don't know that the next move is semiconductors. They might take a rest. Might be earnings that they get involved again. But the hottest sector for me right now is going to be these XLC names. And that's going to be Google that I was just recently stopped out of and now have to go and reevaluate. But I would focus on these names. I would not sleep on this. Now, if you want to see like where you are with just straight up tech and go look at XLK, I would not rule these out. And this is Apple and Microsoft are 46% of this index. But if you take a look at this, you came to the top and you rejected, okay? You usually do get rejected the first time, right? That usually does happen. Now, if I go back to here and throw these in, I'll notice a couple things. Okay, the 12 is not something I really respect, and you should note a difference here. Okay, the stocks themselves are going to respect these more than the indexes themselves because it's a conglomerate, and these are not standardized moving averages. So if you look here and you look at how you're acting, okay, well maybe I come back to the 22. What have I not broken? I've not broken the 55. Okay, so if I broke the 55 here, I might have an issue, and that's something that I would think about. There are signs here that are not ideal. And I'm going to do this on the weekly first so that you can see this, right? You can see how you're all the way up here. You just challenged all-time high and people are upset that we just didn't blow through. You're going to have to give this time to set up again, okay? And it might mean that you pull back down for a couple weeks and then go higher, right? You're going to have to give this time if you want to be a longer-term trader. If you don't want to be a longer-term trader, then you don't have to give it time. You just act. But if you look at that, that is not something that I'd be rushing to get out of, right? That's where my head is. And now I do want to point this out again here. Look at this. So here we are, and you can see the breakout right here, right? I don't know why it always has to do that there, but you get it. You can see it right there. So then if we go over here to the daily, I do want to point this out because I do watch things like this. Well, I broke right there. Okay, so if I go and look at that level here, right? And this is where I'm at. Right here, okay? So I have a negative divergence on XLK. So I need to watch that. Now, what am I going to personally do with this negative divergence? I'm going to be real clear. I have very little interest in shorting this market for anything more than like a day or two. And even overnight shorting to me right now, it scares me more than it has in a long period of time. But the way that I'm looking at this is relatively simple. If I get some kind of flush, I want to know exactly where I'm at here. So in other words, like I would probably set an alert on that 55 that if I hit that 55 at any point, I want to know because I've been respecting that 55 since I broke over it. Okay, this 22.12, I'm respecting it. So maybe if I'm here, I'd want to know that if I get there, right? Like, do I get there on a flash down? And what that's going to do is get me to what, 331-ish? Maybe I break that. Maybe this minutia holds me in there, right? So now you mark some levels off so that you're prepared when that breaks, right? I'm not interested in, I can't be any clearer, I don't think, that I'm not really interested in shorting anymore. That ship has sailed. It's very difficult for me to understand how people are going to look at what this stock has done year to date. Apple, the leader of all tech, okay, what it's done for a year, and somehow someone miraculously is going to say, oh, we're at the high and we're going to crash. That is the most delusional stuff out there, right? And the only reason that people predict is ego. I'd rather analyze and make money. And if I'm wrong, I just get out of the way because you use money management principles. Anyway, see what you're doing right here? Does that look like something that's going to fall apart? Maybe, maybe not. Maybe Microsoft drags XLK down, but we have a position in this in the community, in the Alpha community, and I'm not doing a darn thing with it. You know, I'm not doing anything with this except staying with it. I mean, it looks to me absolutely perfect, so I don't really see the need to panic this or to sell it. Now, I want to go through those three sectors because I think that they're very important that you understand those, and I want to talk about XLE. Okay, and I'm going to leave this up on a daily for a minute. And I always do my three stool lines so people get it. And those lines are like this, where I come in and I draw this little box right here, and then I'll draw this down. Come on. Since I switched this mouse, for some reason it makes me click twice. So then we talked about this stool before and how this is a pretty clear stuff, but this is your macro stool, this is your fundamental stool, okay? And then this is your other leg of technical analysis. Now, when you sit on that stool, you might lean on one way and one on the other way, right? Either way, whether you're calling this macro or whatever else you want to call it, I'm going to just refer to it as macro. Sometimes you lean on one, sometimes you lean on another. Now, if I was to look at this technically, this is not something that I would want to get involved in, but there's a couple things that are outstanding. So if I click all this off, and I'll get rid of all these drawings for a moment, and we can just pop this back in because, I mean, everybody should be able to see exactly where the heck this is and why that's such an important area, right? So we're looking at the energy sector for those that don't remember that it was just right up there. And you're looking at that and going, well, you can't possibly buy that. Well, here's my concern in looking at this and saying that right now. I've got this going on, right? So I don't know, I'm getting this from Politico for people that ask or comment, and let me know if getting into that level of detail was important for you. Please comment below on that, on those individual names. I always vacillate with, do I deal with more short-term content or long-term content? The week that we do this stuff, I try to do more long-term so that you can have a map to get into the week on what's pertinent and what levels are pertinent. And then the nightly videos I do so that you can figure out what you're going to do with the information the next day, right? So that's how I do it. That's how it's supposed to come out in my head. So any comments on that are greatly appreciated. But I'm not going to be one of these guys that goes from, economist to submarine expert to geopolitical expert to, understanding how vaccine works expert. Like, that's not my wheelhouse, okay? I have so many varying opinions on Putin and this war from that he's part of it, he's staging it, to this coup's going to work, to this coup's going to be quelled. The one thing that I know about this more than anything is I know that I have absolutely no idea what I'm talking about if I talk about Russian geopolitical events. That's the one thing that I know. So the argument that I'm not going to get into is what's actually happening over there, because I don't have a clue, right? And everything that we get information-wise, who the heck even knows? So if you think about it from that perspective, okay, well, what does that do? Well, supposedly what's going on over there is not about ending the Ukraine war. It's about that it's not going the way that certain people want it. Now, whether that's true or not, again, I don't know. What this does do is this creates uncertainty. Now, if I have uncertainty, then I have opportunity. And what gets me is looking at XLE, and this is what I would do, and you might want to just listen to this again. I'd be going through the energy names, and I'd be focused on the ones and the shippers and anything that is tied or comes in and out of Russia. Because that kind of stuff and those kinds of shippers around those routes, they're the ones that are going to be disrupted. But I have a really hard time understanding how crude oil would not go up shortly, or natural gas or any resources would not go up shortly. I have a really hard time trying to figure out, like, why wouldn't wheat go higher, right? Like, it just doesn't make sense to me. I would think that wheat would go higher. You know, maybe this leaked out. Maybe this is why this started to move this way, right? So it just doesn't make any sense, because let's say that you play devil's advocate and say, okay, let's say the coup works, and it's a coup. All right, it works. This guy goes hard into Ukraine. All right, well, then he does. Okay, well, let's say that he doesn't go hard into Ukraine. Let's say that it's a coup and he renegotiates the wheat deal, okay, because he wants to be more of a hardliner, right? There's nothing about this guy that's doing this that's warm and fuzzy, that he's doing it for like humanitarian reasons. It's very clear if you listen to any of the speeches. So, I mean, you can at least say that. Doesn't make me a geopolitical expert. So, but you can see where the guy's going with it. So you look at this and go, okay, well, how is this going to affect the entire market? I don't know. Some people are saying, well, they're going to be more focused on Russia right now, so they're going to get out of Ukraine. I don't know that. And then there's the assumption that if you get out of Ukraine, that you're not going to go back to it. I have absolutely no idea how that plays out. And that is not something that I'm willing to bet on. What I'm willing to bet on is uncertainty. And that uncertainty is going to create demand, because people are going to panic. No different than how people panicked here with toilet paper, right? We saw it 3 years ago. Everybody rushed to the store and that's the thing they bought. You're going to have people hoard wheat. Okay, they're going to hoard these things. And the majority of wheat for the world, Ukraine, one of the top areas. So this kind of stuff I would be looking at, and it's definitely things like this I'd pay attention to. I would be paying attention to crude oil. I'd be paying attention to basic material names. Anything that comes out of those routes, I would start looking at. I would start looking at copper. Anything like this, I think, has massive potential right now. And I think people are grossly underestimating that potential. If I was to look at one of them, the easiest play for me to state is probably going to just be the energy play, the oil play. I mean, I don't see how crude oil doesn't go higher. And that could be something that could affect CPI, and something we should talk about a little bit later. But I do think that that is worth discussing. Now, we have a bunch of other stuff that I really want to cover today. And you can let me know if you think that these videos are too long on Saturdays or not. The one last week got great reviews. It was about 50 minutes, but just this helps me also plan my week and just review what I'm thinking. And then I like reading the comments, because it lets me know what other people are thinking too. And I like dissenting opinions, because again, none of us have any idea what's really going to happen. Now, if you take a look at this and how you're getting tighter and tighter in IWM, this is the one market that's having the toughest time. And it really is related to what's going on with interest rates. Now, I'm not going to get into the interest rate debate. Is he going to raise rates? Is he not going to raise rates? We've gone over that. There's a 77% chance he's going to raise rates. Okay, so if he doesn't raise rates, it's going to be good for the market. The market's going to go up. I'm not falling out of bed here. I don't really care to use that many moving averages in here, because I'm what? I'm flatlining. So if I'm flatlining and I put moving averages in, for example, okay, well, that in a bowl of soup got me a bowl of soup, right? Like, it doesn't really do anything for me. So what I tend to do with this is go, okay, well, I want to just kind of see, what are we doing? Well, we're kind of rolling again on the daily. The majority of volume that's coming in, you see all the red down here, right? So the majority of volume that's coming in is red. Okay, so that means that KRE is probably down. KRE, these types of names are about 15.9% of IWM. And if we see that, then that's definitely something that we want to pay attention to, right? So I'm not so sure that, I'd be rushing into all these regional banks like you saw all these people were doing. And I think it's very difficult to say I need to be in regional banks if he's going to raise rates again, because we don't know what that's going to do to the next regional bank. I stated when the Fed made their statement that it was the single worst thing that could possibly be heard for regional banks. And I'm not alone in that thinking. There's several pieces on that. The top regional banks will be just fine. This is one that we own and have done exceptionally well with. They will be just fine. Okay, these types of banks, they're not going anywhere. People might sell them down. They might take profits on them. But candidly, over time, those two banks I just went over, FCNCA, NYCB, which we're up over 25% in, they're not going anywhere. So keep that in mind. Now, I do want to go through, let's see if I can make that a little bit better here. I do want to go through, let me see if I can get rid of that, what that does. Perfect. S&P cumulative AD line. So I went through this last week and I got a bunch of questions about this. So I'm just going to walk through it again on exactly what this is. So cumulative AD line is exactly what it says. As the advanced decline line goes higher, it becomes cumulative, meaning the breadth is increasing, the breadth is increasing. And as that breadth increases, right? Well, that's exactly what you want to see. So they add to it and becomes, quote, cumulative. Okay, so you can see your line coming straight across here, right? Now, the important thing about this area right in here is that this gives us an all-time high here, but no all-time high here. Okay, so cumulative AD line, all-time high. S&P, no all-time high. So let's go back 20 years and just take a look. And we can probably go back all the way. I don't really care. So let's go back all the way here. All right, and let's take a look at certain sectors in time and see what they're telling us when this happened. Because what we have is we have a situation that we haven't had a lot of, right? We have not had a lot of all-time or new highs on this index. And then you start looking at it and going, okay, well, what is that really going to do for us? So let's go to this and we'll zoom in on this. Okay, so this is really where you started, right? So if you come here and you go across and you look and go, okay, well, when this broke out here, we started breaking out. Okay, well, when we broke out here from these lows, we started breaking out. Okay, so that kind of follows the vein on what we're talking about. Now, if you go to other periods in time, for example, let's go and take a look at the Great Financial Crisis, for example, and see if we can find anything there that could tell us how this is going to play out. And then you look here and you're coming across and you're going, okay, well, here's 07, and you can see where that's the peak. Okay, now, if I look at the peak in 07 right here, right, and then I look at the peak here, well, I'm over here. Well, is the market higher than it is here? No. Okay, well, how did that play out in the next couple years? Okay, that's how it played out. All right, I'm not saying you're going to go on a tear because you don't have 14 years of free money. What I'm saying is that if you go to these little levels and you look at them, for example, if I go to, let's do it this way and go to 16, and then we'll go into 18 right in here. And you look at them and you see these breaks, and these breaks are happening before the S&P is breaking out. They are leading to rallies, whether that's the Great Financial Crisis, whether that is 2016 and a pullback, they are leading, okay? And you can see that. I mean, we can see that very, very clearly when I do this. Now, okay, you can see it here as well, right? So over time, I do think that this is something that we should be paying attention to. And I do think it's alluding to the fact that the S&P hits a new high. My personal opinion, and this is an opinion, and it can change because we have a war out there. We have a ton of geopolitical events. We have a ton of turmoil politically in the US, and we have a ton of uncertainty. But to me, I think it's realistic that if you go back and look at this and just remember this, once you see this move that I'm talking about right here, where you're hitting that high, 18 months from now, 12 to 18 months from now, you usually hit a new high on the stock market. Do with that what you will. Okay, that's what usually happens. It does not mean it's going to happen this time, but that's what usually happens. Now, this is Sentiment Trader, and I did reach out to them, and they are fine with me using their stuff, and I like their stuff a lot. So I think we should just update this smart money, dumb money, so that we're all on the same page with it, and just focus on it for a minute here. If I go back 20 years, you can just see all this nonsense, right? So then we drill back and we go 10. And as we know, it's not smart money, it's not dumb money, it's institutions and retail. So then we look at 10 years and we go, well, what period in time did we have retail having so much more money over the past than institutions that had to get out of the way? When were we in that kind of situation, right? And then the fastest time that you could find, to me, is the pre-pandemic right here, right? And you can see exactly during that period in time, and I'll zoom in on that right here, okay? And you can see right here, right, what happened. We had a nice rally, okay? When you have these spreads, you had a nice rally in the market. And then, of course, the pandemic, and then look at how that shifts, okay? So if you look from that perspective, now let's go and just drill into some of these others and just see, is that an anomaly, or is that something that happens all the time? Is that something that we can look at and see more of? Well, here we are with dumb money or retail and institutions washed out. Kind of worked, right? But then it eventually really works on the 17th, right? 2017. Then it really starts to work. Kind of worked here, but not really. Okay, so then you zoom in and we take a look at the pandemic. Now, if we look at the pandemic and we look at that spread from here, from when that spread started, and you look at what happened during the pandemic and you come out of it, look what's happened. Okay, so then that takes us to now. For some reason, I'm supposed to look at this and what's happening now and say it's bearish, right? That's just absolute frolics. The spread's too wide, therefore we're going down. No, when you understand what this is and you understand what the data is, you can make a more informed decision, okay? Right now, retail is blowing out. Retail is blowing out, okay? And institutions are kind of looking at this and going, we might have made a decision. We might have made the wrong decision. And based upon that, we're going to start buying, okay? So that's a substantial move in a very short period of time. And I think it's worth mentioning, and I think it's worth paying attention to. I can't stress this enough. Like, even if you go and take a look at like the S&P small speculators, right? And go and take a look at what they're doing here. Let me show you this. Oh, it's not giving me it that way. Let me do it this way. Spec. There it is. Small spec index position. Okay. So if we take a look at the small speculators position, let's zoom in on this. This is us completely washed out. Let's just go back all and just remind everybody that these are 40, 50-year lows. Okay, so when people are saying, oh, institutions are invested, they're completely invested. Did they look completely invested in smart money, dumb money? Did they look completely invested here? They're not remotely invested. They are so out of position. It is staggering, right? It is absolutely staggering. Now, maybe they don't want to pay for NVIDIA where it is right now, right? But what I'm trying to get you to do is I'm trying to get you to kind of understand how out of position these guys are. Okay, and then you start drilling into this, right? Now I'm at 3 years. Now look, okay, well, we had to get in and then we're going to get out because we got nervous. So how'd that go for them? Not very well. You're still under the zero line here, okay? You're still under the zero line and the S&P is starting to turn, right? This kind of stuff you have to pay attention to, because if you were up here, if we were up here and we were super overbought and small speculators are going crazy because everything's so great, right? Then we're going to be dealing with this. And that's not what you want to deal with. So to me, I like that a lot. Let's extend this out a little bit here. Slide this over. Perfect. So I would be paying attention to that. Now, I want to just point a couple things out that I think are worth mentioning. Okay. And this is why I think that this may accelerate, listen to the words, please, may accelerate more to the downside a little faster than we're expecting. Okay. There are signs in the market that you go and you watch, and you know this from playing with the market for years. So when I have this kind of nonsense, like APLD is going to come out and change the world, right? And then I look like I'm about to ready to break out, and then I don't break out, and I have a nasty, nasty reversal on a speculative stock, right? Listen to those exact words, please. Okay, it's very specific, and it's specific for a reason. You want to pay attention to this, because this is telling you that you're setting up to come in, right? I do think we're still setting up to come in on this pullback. I don't know how steep it's going to be. I'm still thinking 3 to 5% in that range. Based upon the cumulative average, it might be diluted. I don't know. And I really going to be completely candid. I don't know how to factor in what's going on in Russia. That is such a wild card for me. You know, I can go on Twitter and everybody that knew everything about submarines and carbon fiber all of a sudden knows everything about, you know, various regions of Russia. So the information there is somewhat scary. The other thing that would get me is something like this. Okay, so I will look at something like this and go, okay, well, this is a leader that people have been buying for a period of time. And then I'll go and look at that and go, okay, well, now I have a negative divergence on this right here, right? And now I'm below what? That 12 for the first time. So this kind of stuff gives me pause. And it's definitely things that are leading to the fact that this could get worse beforehand. Now, it's also possible that this all leaked on Friday, and that's why we were selling. That's very possible. In regards to Tesla, all I've done so far is hold into this level. I do not think a lot of things are factored in here with Tesla. These downgrades that just happened the other day, they're ridiculous, right? You're going to do a valuation downgrade. That's fine. You're more than welcome to do that. For me, I am long Tesla. I've been long for a while. I've done quite well with the trade. I have zero interest, okay? But also, as someone that's going to be playing with this, I fully understand that the 218 is really next support, that I'm just flying in the wind out here, right? You have some support down here, 237, 238. But if I break down here, right, or I break here, I can get to here really fast. And we all know that this is a high beta name. So the market gets hit, this can get hit. So hope that was helpful. That's it.